So, are we in a market change pattern, or is this just a pause button? Welcome to a special edition of my
quarterly real estate market update
for Santa Clara County.
And although the next one isn't supposed to come out until June, we've got obviously some special circumstances right now that demand a timely update.
Keith here.
Shannon here.
Adam here.
And as always, my number one goal is to educate and navigate you in the whirlwind that is the Silicon Valley housing market. So let's start with, wow. I'm sure you're watching the news, the stock market, and are having plenty of conversations amongst family and colleagues.
There sure is a lot of volatility out there, and the news headlines are such a driving factor in consumer confidence right now.
Let's dive into how that affects the local real estate market, which is my duty to provide to you.
The news headlines are driving consumer confidence in the market right now.
Although all of the underlying stats promote a healthy housing market, the trade war, interconflicts, and stock market section have people staying on the sidelines.
Inventory continues to rise slowly, while pending sales lessen, but stay strong and consistent.
This is true across all platforms, single-family homes, townhomes, and condos.
So, are we in a market change pattern, or is this just a pause button? Let's talk data, and I'll share my insights with you. For this update, I'm going to combine all inventory, single-family homes, townhomes, condos, all in one club.
Homes for sale. As of April 20th, there are 2,204 overall homes on the market. This is up slightly from 2,144 last week, and thankfully higher than the historically low and unhealthy 1,433 homes available this time last year. Pending sales, now those are at 962, down 4% from 1,002 last week and 1,073 last year, though very consistent over the last 4 weeks despite the economic volatility.
Next, we're talking about absorption rate, which measures the percentage of inventory that is selling. It's currently down to 43.6%, but there's a large discrepancy as single-family homes are at 51% and townhomes and condos are just at 32 to 33%. This is down from last month when it was 52.7 and down from the dominant sellers market of 75% at this time last year. This does signal a much more balanced and quite honestly healthy market amongst single-family homes compared to the very inventory-constrained conditions we saw in 2024 and 23. However, the condo and townhome market currently can be classified as almost a buyer's market.
While we don't have the anticipated April data as of yet, for days on the market, homes this year have been moving quickly, with an average of just 13 days on the market in March, comparable to 15 days a year ago, and also faster than the 24 days 2 years ago. The average home price in Santa Clara County was just over $2,500,000 in March, reflecting a sharp 16% appreciation compared to the just over $2,200,000 in January.
The average price per square foot has risen to $1,306, up 21% from just November 2022. Keep in mind that price per square foot often varies depending on home size. Larger homes tend to have a lower price per square foot due to economic of scales.
So here's a quick recap. While inventory continues to rise, as it always does seasonally this time of the year, despite the fear in the market, there is not a rush of panicked sellers bringing their homes to the market.
Pending sales, although they have not spiked as typical during this time of year, they've remained steady and healthy.
Homes are still selling quickly, with average days on market remaining low. However, I would expect to see an increase in that statistic when the April numbers are out.
Price appreciation in Silicon Valley continues to be a real thing. What will those April numbers bring in this category? I expect we will lose some of the appreciation, but still be above the January year-over-year numbers.
The absorption rates have stabilized compared to last year's frenzied pace, but still reflects a healthy market for single-family homes, although the focus has shifted to the buyer's favor as far as condos and townhomes go.
So what are my insights? The spring real estate market in Santa Clara County has officially had the pause button pushed. Let me clarify what this means. First of all, to be frank, we are not at the precipice of a housing crash, but I'm sure you can find plenty of clickbaiters out there that are itching to tell you different, as they've been for the last 10 years. Understand this basic equation. It will take volume to move the market negatively. Our current inventory is still at all-time lows. Just over 2,000 homes drastically pales in comparison to the 16,000 in the 2008 to 2010 market. That was volume.
And here is why we will not get volume. Back in 2008, homeowners had negative equity, adjustable rate mortgages that were maturing, and it was a truly bad scene. But now the vast majority of homeowners have interest rates below 4%, and home equity per homeowner is at an all-time high.
Sellers are not in panic mode. With market conditions unfavorable, they'll simply hold on to their homes, securing no unnecessary spike to inventory that currently is still hovering not so far removed from an all-time low. This also means prices will hold steady. However, there is an exception. Some owners price their homes intentionally low to try to get multiple offers. And with a good amount of buyers waiting on the sideline right now, meaning less competitors, that might just get their asking price. Watching that strategy backfire and selling for lower than what they could have.
When we see this type of shift, you get some false appreciation, which means that homes might not sell in April what they sold for in March or February, but the general appreciation trend will stay positive year over year. For home buyers, this is opportunity, like what you have been waiting for the past couple of years.
Take it from me. Don't sit on the sidelines waiting for the crash. Because in the meantime, when some good news hits the headlines, the market is most likely to unpause and the buyers waiting on the sidelines will all jump in, causing another spike in appreciation.
Can anyone remember the pandemic pause and the madness that ensued afterwards? Don't be surprised if this is a light version of that. Imagine that feeling when you own a home and you hit the jackpot with lower interest rates and appreciating equity. And more importantly, imagine waiting and that sinking feeling when this occurs. A little insight. Based on my research, investors are buying at a 20% higher absorption rate than the typical home buyer. What do we know that the average home buyer doesn't? I'm sure buying right now.
So if you are in a position that you have to sell your home, don't panic. There really is no need to. Make sure your home shines above the competition, and remember the overall sales numbers are still strong.
I'm happy to share how my strategies will still work in this market. Just reach out to me privately or comment below. Don't be surprised if the second quarter moves to the third quarter. We've seen it before in the Valley.
I hope this helps with all the perceived craziness right now, although I understand it's not easy to digest in a few moments.
Due to the confusion in the market right now, I will have another market update for you next month. And don't miss our Sellers Workshop on May 10th, where I go very in-depth on all things real estate. And of course, if you need a one-on-one conversation how this affects your personal goals, my team and I are always here for you. Thanks for watching.